This is James Hirechek with today's Auto Chartist stock index to watch for Thursday, May 3rd, 2012. After forming an ABCD Fibonacci pattern on April 17th, shortly after bottoming at point C and indicating a possible near-term rally to the target price at 1439, the S&P 500 index has labored through a slow grinding short-term uptrend. Although the index is on pace to reach the target within its identified time period, an intraday chart formation is indicating that downside pressure may be building. This is why the S&P 500 and the E-mini S&P 500 are the stock indices to watch for Thursday, May 3rd, 2012. So remember this is the bigger S&P 500. We see that the market has formed this Fibonacci pattern, and it is on track to reach the target. However, there are some signs that the market may be running into resistance, seeing how it hasn't been able to take out this top at point B. So we're going to look at what the intraday charts are showing to give us a clue as to whether this market has the power to reach this area or not. So the market that we want to look at is the S&P E-mini on the 60-minute chart. This pattern is forming a potentially bearish head and shoulders chart pattern. Now the E-mini S&P 500 futures contract is a smaller version of the S&P 500 index. And this head and shoulders chart on the 60-minute chart indicates that we could be looking at a near-term break. The most noticeable point on this chart is the huge rally up and the subsequent break that helped form this head of this chart pattern. Now that the right shoulder has been formed right here near the 1399 or 98.5 area, our technical analysis of stock index trends indicates that the E-mini is poised for a downside break. With the head and shoulders chart pattern, the goal isn't to trade from resistance down to support or back from support back to resistance. The goal is to generate enough downside momentum to complete the pattern with a drive through the neckline, this area here that I'm pointing towards. And this would take place on a move through the 1389 area. Now with an exit clearly defined here above the 1400 area, aggressive traders should look for the potential break through the neckline to trigger an acceleration to the downside equal to the distance between this support and resistance. So if you take the distance between this support and resistance and subtract it from this breakout area, that indicates that 1378 is a potential downside target if trader sentiment turns bearish. Now if the traders decide to take this market higher, then you'll know it when this area here, this old shoulder, gets taken out. If this area gets taken out, then that bigger chart pattern I pointed towards earlier is likely to take control, and the S&P may take another run at that major Fibonacci target at 1439. So we are in a critical area right now based on our outlook using the longer term and bigger S&P 500 and the short term intraday head and shoulders pattern. So again, the whole area is here. Above 1400, the market turns bearish or turns bullish once again. If it can stay below 1400 and work its way lower, then the payoff will come when the market breaks through the 1398.89 area. This has been James Hirechek with the Auto Chartist stock index to watch for Thursday, May 3rd.